The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pezzamento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pezzamento.
Hi everyone, Basil Chapman singing for Larry Pezzamento. My pleasure to be here. Usually I'm doing my Monday through Friday show, 11 o'clock till noon at 877-927-6648. And right now I'm sitting in for Larry. So this is the noon show Eastern Time. Be here until just before the final segment, and then I have to leave just a tad early, so I'm going to do as much as I can. Couple of unfinished thoughts from the previous hour. I'd like to just finish them up. The E-minis on the S&P, trading up 2 right now, has made a peak D. Well, we don't know if it's a peak G just yet. Let me open this up so you can see. If you're looking at Tiger TV, what you're looking at is, in the Chapman Wave methodology, the objective is to get you from the lowest, most identifiable low bar. If you go to 1844, the round number low, I love round numbers. We've been seeing round numbers a lot lately. That was the low at 2 o'clock on the 28th of April. That started to move up in the S&P minis in the 120-minute chart. And this is a beautiful example of a very quick peak A to B to C. But then it extended and went all the way to a bunch of doji candles going to a D, and then an E, and that E was its 1875.25. That occurred at 2 o'clock on the 29th of April. And then it pulled back, but it pulled back in a rectangle formation, which I had drawn in and was showing on the show for a couple of days. And then what happened, there was a doji candle low at 1866.25, also at 2 o'clock on the 30th of April. That was yesterday. Good grief. Yesterday? At the close? No, surely not. Have we had this many 120-minute bars? Well, whatever it is, we've gone to a peak A, a peak B, pull back with that trend line that I had drawn. I show my subscribers every morning. I show them the 120-minute chart and the daily. I don't give a buy or a sell. I just give the parameters to watch the trend that I believe is in place, and I show the technique. And in this case, there was a rising wedge. And what happened is we opened this morning, went a little bit lower, hit this particular moving average right here, which is the 50-day moving average, right, the exponential moving average, and then popped up and popped out. So what happened is we made that D, and that D came in at 1882.75. And what I said to subscribers, and I said it on my show as we were, I said to subscribers, and I typed it into the den, that the 1882s is going to be, that's going to be the test. How we surpass that today or tomorrow is going to be really important. Well, 1882.75 is the high. So far, this is a peak D, unless within this bar right now, it breaks above 1882.75. If it does that, it extends leg D. The stochastic is at 76%. That's good, not great, but it's good. And the MACD is flat but positive. So we'll see. And that trend line, that rising wedge formation, has in fact got the pullback. And invariably what you get in this particular pattern when it concludes is you very often get some kind of a U formation. And as you come back to the previous high, that's the big test. So we're going to be watching this closely. In the daily, there's not much going on other than, because the price has finally gone 1882.50, it's gone 25 cents above, makes that a leg B. Isn't that interesting? And because, let me expand this. So looking at it right now, it's just too squashed for you to see clearly. I'm expanding it. You remember the 1-to-1? That's the A to B equals C to D in the classic lightning bolt formation. Completed at 1803, shot back up. We have not yet broken 1892.50. But because the 1803.25 level was below the last No, it isn't. Okay, so in this particular instance, it's active. If it goes to a new high, I can call it whatever the letter is, /F. But in the meantime, it's a very positive thing because it's walking the 9-period moving average. Stochastic's very strong at 86%, and the MACD is good. So this is very nice action. So I want you to do a couple of other things here. I want you to show you something. I was introduced to the 300-minute chart, 5-hour chart recently, a little while ago. And I followed it. I didn't have any skepticism. I had no thoughts on it other than say, hey, that's great because it's even closer than the 120-minute chart to the daily chart. And since the E-minis trades almost around the clock, this is a wonderful intermediary time frame between the longer time frames, like the daily, and anything in the shorter, which is usually like 120 minutes or 60. So the 5-hour is really great. And the 5-hour is saying in the NASDAQ E-mini, the 100, this is the June contract, it's saying it's above the 9-period moving average, having had a lot of resistance there to peak F at 35.95. It's pulled back to the 35.29 area. Now it's moving back up again. You see this Chapman wave cup with that inside wedge, the Chapman wave inside wedge, that pink line, the little dashed line there. That's saying that should be the line that gets hit until, in this particular instance, on the 2nd of May, it breaks or tests 35.95. And that could be leg C or D. I don't know what it could be. It could even be B. But that's the way I'm looking at it. The left side, right side, price time. That's just, let me type that in. Left side or right side. And this thing here is called the Chapman wave inside wedge. And usually I make it pink. If you have the ability to change colors and things, I find it really helps. Not only that, I was a visual artist back when I left high school. So I like these colors and I like these designs. Okay, so that's the cup formation. However, there's something else you got to keep in mind. This is the second big cup formation. I'm not a big fan of cup formations that don't break out to new highs. So in the meantime, I'm saying there's a good chance that the NASDAQ will go to a moderately higher high, above 35.95. And then I think you've got to be somewhat careful. But all of these charts going to new highs makes the weekly charts very positive, because if this goes above the 1892.50 area, it's going to go even by 25 cents. That'll be leg C. So that'll be a positive in the weekly chart. All right, we're going to go to our calls on the line. We've got Ari in Arcadia. Ari, how are you?
Good afternoon, Basil.
Good afternoon.
I'm well.
Good.
I like the format of this wave that's occurring, and it's also in a classical ABC up at the same time.
So you're looking at XONE, which is the X1 company. This is one of those 3D printing companies. Beautiful doji at the bottom. Actually, I've got to talk about this for a moment. The bottom was at 24.34 on the 15th. It went in a single leg up to an A, and then it pulled back an inside bar, went to a B, a bunch of little dojis here, and now it's in leg C, and it's hitting this moving average, which I believe is the 32-period moving average. Let me just have a look. Hey, it's the 50 again. 50 once, 50 twice. Yep, that's it. It's the 50-period moving average, and it's above the previous arch of A minus back on the 31st, and it looks like it's trying to go for the gap between 40.93 on the 20th of March and 41.64, the gap down from the 19th. That was the low of the 19th. The next day it gaps down. But there are a couple of things that are very important. The stochastic is good. The MACD is good. The left side, right side price time match is more a V than a cup. I actually like V's a little bit better. They seem to have more power because they don't take time to consolidate. They just keep moving. The big problem with a V pattern, up or down, is when they conclude, sometimes they can conclude and reverse quite sharply. So far, there's no sign of that. Leg C. I'm going to ask you a quick question in a moment. I just want to do, this went to an A minus. It opens, goes down, plops down to 23.50, and then skyrockets up to 78.80. That is a huge move with all the other 78.80 with DDD, SSSYS, probably can't remember their names right now. And then it comes back, but it hasn't yet broken to a new all-time low. It went in the weekly chart, and this is really important. XONE trading at 36.53, up $1.99, up 5.76%. It went to a peak E at the very top, and then it had a peak C minus. When a peak C starts to fail, it invariably gives up in that H pattern, lowercase h pattern, almost everything, if not everything. And if it takes out the left side low, be careful, because it can go much deeper, which is exactly what it did. Now this is what, at first, I glanced at it because I was looking at the daily and it looked great. I have to, at this point, still consider that it's just a retracement at this particular point. Now, you tell me what's going on.
I like the way it's an ABC up. I view it as an ABC up.
This is your classical A to B equals B to C to D, right?
That's right.
And you're considering that the low that was formed at 24.34, let me type that in, 24.34, went straight, we skipped the A, we're going to the B, and the B is at 33.80, and you were saying the pullback that occurred from 33.80 is the B to C, 33.80, and it was very small, but I'm going to do something else if you don't mind. I'm going to show you a technique that I've got, and it's a time price technique. So it gives you speed as well as amplitude. Now look at this. If it's a classic like you think it is, by the 7th of May, it should be testing the candle, the high of the candle of 21st of March, which is round about, the low was 35.14, and the high was 39.77. So that's what I call it, the one-to-one extension, Chapman wave one-to-one extension. And the reason why I use it in this different format is because this really is based on time more than price. So it says if this is going to succeed in what you're thinking is an A to B equals C to D, because of the power of the move, it should have enough power to get somewhere by the 6th or 7th into at least the 38s. And right now it's at 36.50. And the MACD and stochastic tend to agree that there is strength. Of course, they don't tell you how high it can go. Now, the big qualm that I have, I'm skipping the monthly chart because it's basically an IPO. If this has begun a brand new move, this could be the move, the more serious move. But I'm just going to say to you, what price did you get in at?
27.50.
Oh, okay. Well, there's not too much to discuss. You're in a fantastic profit. All I'm saying is leg C, and it should pull back, 36.50. It should pull back to the 34.50 area, and then it should go on to higher highs. Hey, congratulations, Ari. That is a beautiful, beautiful trade. Thanks for calling. I'll be back with Brian and Mike.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Just one quick thing I wanted to do. I just wanted to tell Ari, if he's still listening, Ari, the 120-minute chart has made a second buy mode to a leg D. This doji candle says that just above the 200-period moving average of 35.42, it's about just over a point higher. It says it could put a number of stocks are exactly like this. They could pull back with the next few hours going into tomorrow morning. It could be a bit of a pullback. And so I just wanted to tell you that's the only thing I'd be careful of. And that means that tomorrow we might see peak C in XONE. That makes that move to 37.20, 37.80 kind of important, because how Monday or Tuesday gets higher into that 38 is going to be very difficult. But that's just wanted to tell you that it's just a little toppy right now. And let's go to Brian in Jackson, Mississippi. Hi, Brian. How are you?
Oh, thanks, Basil. Appreciate you taking my call. I tried to call you the other day, and you were getting off the air. And I bought some puts on Tesla last week. And at that time, you said you thought Tesla was going down. Do you still feel that way?
So this is what I'm looking at, folks. Tesla TSLA was trading at 212, up 4.65. In terms of those momentum stocks that got beaten down, this is one that so far, even though it's a great day and the stochastic and MACD are improving tremendously in the daily, it is lagging. Your puts are for May or looking out further?
They're 150 Junes.
150?
June. Yeah, June 150.
150, okay. 150. But it is June. Now, let me see. Yes, what happened was there was an arch formation, and it made a trough F at 184.32 on the 15th. it popped up and it bounced, it reversed at the trend line, the downtrend line that I'm showing here in the daily chart, and it did pull back, and it pulled back to 190.50. The market move to the upside in the last 3 days has helped Tesla. My thinking is looking out. Now, here's the other thing. The move from the low to the doji high of at 4 o'clock on the 22nd at 219.33, and the gap down produced a very sharp move, but not to the low, but towards the low, and it went to that 190.187 level. Now we've gone through a very quick peak A, peak B, peak C, peak D. No, leg D. We haven't got the D, and it's way under the 200-period moving average, and this entire buy mode to D is much smaller than the initial one. So I don't really feel too differently about Tesla, and you are in June. Oh, boy.
Well, it wouldn't have to go all the way to 150 for me to make money on it. I mean, there's, even though the premium's fairly high on it, I mean, the puts increase in price. If it got near 150, I'd still be making a pretty good profit on it. So.
Okay. So what I'm looking now, let's go one step at a time. I want to protect you for the upside in case it doesn't turn around, because there's a pattern that I look at, which is a formidable pattern in the weekly. And that says if it maintains the move to the downside, it has to not break the candle of high of last week, which was 219.33, it's 7 points higher, and hold there into even midweek next week. It needs to pretty much fail kind of where it is right now. And if next week Tesla, instead of moving to that 220-ish area, which would be the logical move to the upside if it's going to follow other momentum stocks, if they keep rallying, if instead it starts to pull back and by Wednesday it is trading closer to 205, that would confirm for me that the downward pressure of the weekly chart supersedes the fast-moving average, which is still acting quite well in the monthly, but the stochastic is turning down in the monthly. So I have to go step by step. I'm of the belief that Tesla has, how can I put it? In a sense, it's run its goodwill, and it needs now to produce the goods. And it just seems to me from the chart that there's something internally that's going on that says it's going to be a little while before the next big move in Tesla occurs. But that doesn't mean to say it has to break decisively the 184 low that it made recently. It means it could go sideways and just hang around. You know what? I'm going to ask you to give me a few minutes in the break. I want to do a little bit more work on Tesla so that I can give you something that I can give you numbers exactly. Okay?
Okay.
I'll be back, folks. We've got Brian Jackson, and he's in the put position in Tesla. We've got to figure out how it's going to work out because Tesla is running a little bit. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. So this will be my last segment in doing Larry's show, because after that I've got to leave a little early. So I just want to let you know we're still online with Brian in Jackson. And so this is what I'm looking at here in Tesla. Let me just pick this up here. TSLA. Tesla, I'm suspicious of the rally here. I think Tesla's being lifted up. This is just what I think. I mean, technically, the daily had a beautiful stochastic and MACD move up, and it hasn't broken to a new recovery high above the 219 area. So I'm looking at this and I'm saying, if Tesla in the next few days, there's tremendous resistance between 218 to 220 with the 200 period moving, yes, but if it even gets to 220, that's starting to look quite good. It'll bring back buyers. My suspicion is if there's a failure later today or tomorrow and Tesla participates on the downside, then we're looking at the H pattern that can go to an M pattern. The next move down in Tesla that goes back towards the 190, if it does, between 190 and the 185 area, that's where we're going to have to watch it really closely, because that's either the opportunity to get out of your call, your put positions if it's starting to show that it's making a base there, it's not prepared to pull back into the 180, 170s, but instead it's quite fine just going sideways. But I'm watching it real closely if that's the case. If, in fact, it starts to rally, then I'm just going to say, you know what, you have to lighten up a little bit on the puts. You can always get them back if Tesla starts to fall a little later in May. But I don't want you to be at risk with a very high profile, a sexy stock for many people who now, most are underwater. That huge candle that went to peak E in the weekly, on the week of the 28th, that went all the way to the 265 round number high. My suspicion is that they are very upset, and they're going to start to either sell if it goes a little lower, and that'll increase the selling. If it goes a little higher, they might become brazen and say, damn, I should have been adding all the time. So I'm going to be watching it closely.
It's a very emotional stock. You're right about that.
That's right. So
thanks, Basil. I appreciate it.
So I'm looking more at what the protection should be, not how much you can make, because my eye says that there's a good chance that if Tesla doesn't participate now at all, then it's going to retest the 184s and it'll probably break it. That's what I'm thinking. I'm also thinking that I need to go a little bit. I'm going to do a little fundamental work on the Tesla as well. I just want to see what's going on, exactly where they stand, because that whole battery situation, that's going to be very costly, starting up factories and things. So let me look into it. Meantime, back at the ranch, it's acting well today. It's at the resistance level on a very short-term basis. Be a little careful if it breaks above 214. Okay?
Thank you very much, Basil. Appreciate it.
Thank you very much for calling. Then I had Mike couldn't hold on the phone. Mike in Boca Raton, Florida. He said Amazon hit a low of 298.10 this morning. I think you've got a bad tick. I watched it, believe me, from early this morning. It hasn't hit the levels that I've got to stop. And I went through every trade that I've got here listed in the time and sales on TradeStation, and the 303s is pretty much 304.13, 304.5, 3 all the way from 5 o'clock this morning. I'm not sure, but let me know if you got stopped out. I'd like to know. I'm always very strict in my opening call. Anyone who gets stopped out and it was a legitimate price, I have to take off our list of whatever it is that we're having. So, Mike, thank you for that text, for that message. Now, the question I had from Jim was NMBL. Now, I've never seen this before. And it stands for what? Nimble storage. But I don't know whether this is a storage company or whether it's like the storage company, STX, what's the storage company that's done so well? Anyway, hard drive storage. Anyway, Nimble or one of those cloud storage. But in the meantime, it's trading at 25.74. It made a round number. Is that a round number high? It made a high back at a peak C minus at round number 58. Boy, those round numbers, potent. Oh, I meant to tell someone in the den. WC, thank you, Dave. Dave White. He's our resident guru, and I was going to say to Dave, yeah, one of the expressions that I often have is for the past 5 years, in fact, in the market, basically it's been sell at your own risk, short at your peril. But sometimes, if you get things timed exactly right, and I know Dave's done this, he's had some absolutely fantastic short trades. Congratulations, Dave. So, we're looking at Nimble trading at 25.76, up $1.11. Nice candle so far today, having made a low just below 24 at the 23.56 level. Let me type that in, 23.56. 23.56. Okay. So the question is, what was the question? He had it a while back, and now it's enjoying a momentum run-up. It was enjoying a momentum run-up. Been out for a while, but maybe time to jump in. So I'm looking at this daily leg E. Yep, now it's probably trough E. 120-minute chart. Now, this is very interesting. In the 120-minute chart, it did have a nice A to B, A, B, C, D to the upside fairly recently. And then it pulled back, and that's gone to a trough A, B, C, D, E. Trough E as well, so double E. And what we've got is a nice move, but it's really just a move. Now, I'm not sure okay. If you got in this morning, if you are in, I'm going to say okay. Now, I know this could really move to the upside very quickly because it's got a whole bunch of candles on the left, very small. It's made like a channel. This is the kind of channel that I talk about very often. It's what I call the snail. There's a price movement in a very narrow trading range, when it on the upside or downside. And when it breaks to the upside, it virtually takes out like 10 or 12 of the left side candles because it's such a big move, and all the rest were small little candles within the channel. So if it's going to do that, I'm going to suggest two things. One is I would really I'd be nimble. I would only, I don't think this is going to bounce very far right now. That's just my guess. It's flat stochastic at 7%. MACD's not good. Monthly, the weekly is still very poor. Monthly is an IPO gone to a lower low. I get very nervous when that happens. I don't think it's starting its brand new move. I think that's going to have to wait. So I'm going to suggest two things. One is that if you're in it and you want to just get a little bit here, I don't know if I'd wait around at 23.64, 24.08 was the low. I'm not going to have a $1.64 stop. I'm really stuck on this one. I don't see much more than a bounce. And if the bounce comes, the stop that it's just had is the 120-minute chart. This better not last too long. By the end of the day, I want to see it take out the high of 26.16, go to 26.20. Then it could pull back, but I need to have conviction. They just do like that little doji candle there at the open yesterday, and then a move. Now at the close yesterday. All right, here's my analysis. I would just nibble at it at 25.69. I'd give it no more than 30 cents. It just has to work right away. I'm prepared to get in later when I see real signs of strength. So this is just the first hint at some kind of a turnaround. The flat stochastic says to me, boy, 28.11, the 9-period moving average, that is far away for this stock. Here's my recommendation. If you're going to get in, you can only just buy a tiny little bit, and I'd increase it only on strength. And I need to see the stochastic over 20%. I don't think that's going to happen. So if you ask me, would I buy it or would I not do anything? I'd not do anything. So I'm sorry. I just don't see it at this particular point. I might tomorrow, I might this afternoon, I might Monday. But at this particular point, I just think that a risk of a retest with a slightly lower low is more likely in the near term. So I hope that helps you. Now, just a real quick thing to see if there are any more questions here. Oh, yes. I had something written down here. Oh, boy. Where did I put it? Something, yeah, that's right. The inverted yield curve, I really don't think I can go into it now. And I also have to think it through a little bit. I have to come up with a lot more. But I'm looking into the inverted yield curve very closely because my suspicion is the VIX, the yield curve, and bad news, which I always say bad news and the VIX going higher is absolutely what you need to get for some kind of a top of consequences. But I'm going to have to also look a little deeper into that yield curve. I'm just going to show this right now. You see, we went to a lower low today. That's leg C is extended down. That in the yield, the 30-year yield, it's gone to 34.12. Last week was 34.18. So it's gone 0.06 lower. I'm watching this real closely. Now, and crude oil has to be put into the equation here as well. So let me, you know what? Before we even start to run out of time, I want to just quickly go through, just on the Dow, I just want to show you that this particular pattern, you remember the last time from 16,505, it went to 16,631. That's 127 points or so higher. Well, this can go 16,631. We could, in fact, go to the 16,050s or 70s. I got to watch this real closely. I am making a new all-time high is very positive in the weekly chart. It's what happens after that when we pull back and go to leg D that's going to count. So my bias right now in our positions, all long, 6 positions long, all doing very nicely. Most importantly, what I've got to do is I've got to assess to see, is there sustainability? We're just getting into that double top area. I'm always a triple top, actually, in a sense. I'm always a little nervous. Let's go to Ben in Tallahassee. Hi, Ben. How are you?
Basil, how are you doing?
I'm very well, thank you.
Well, first of all, fantastic job sticking to your system over the last 2 weeks. It's, it's been pretty amazing. You just stick to your guns, and you did a phenomenal job.
Thank you.
Yeah, New York Stock Exchange. Can you remind me what you have that in as a weekly?
Now, this is a very interesting thing because they all, finally, I've got a match. It took me so long because I had to do reassessment, and the Chapman wave and this S&P was the only one that was tricky, and because it's such an important index, I had to think it through. But it is so clear in the New York Stock Exchange, we've gone to a peak E at 9,406. It should have been. Let me just double check. No, 10,406. That's the 9 should have been a 0. And then it pulls back to 9,732. That concluded peak E with a wedge formation, and it made that V or cup formation with a slightly higher high. At 10,669 in the NYSE, it went, no, not 10,000, that's over there. At 10,000 on the week of the 7th of March, it went to F/A. The week at 10,669, the week of the 4th of April, it went to G/B, and all it has to do is go to 10,669.44. I have no choice but to call it C. That corresponds with what I'd see in the S&P. That corresponds with what I would get in the Dow. So we'd be having all of them aligned, and that's really what I would be looking for.
So I'm sorry, you said peak C, correct?
So it would be, no, we haven't got a peak C. It would be a leg C if it went even 1 penny above the high of the 4th, which is at 10,669.43.
Okay, so I guess having said that, and knowing that the New York Stock Exchange has so many more stocks than any other indices. 1,800,
I believe, right.
Yeah, I mean, do you think it's pretty apparent that, you can look at the Dow, you can look at the NASDAQ, you can look at the Russell, all the other indices, but it almost seems like as the monthly and the weekly trump the daily and the 120-minute charts, almost like the New York Stock Exchange trumps all the other legs when you look at this from a 20,000-foot view. I mean, you think that's a fair assessment?
I don't have time to get the other one. I'll get it up tomorrow. But right now, I've just grabbed the monthly charts of the Dow Diamonds, the white lines on top, if you're looking at Tiger TV. The green one is the SPY. The bottom one, the one under it is the IYT, the transports at all-time highs, and the OIH, which is the oil service. I just happen to have that on this particular chart. I don't have the New York Stock Exchange, but it would look very similar to the IYT, which is to the SPY. But if you're looking at this, you'll see they're all in alignment, except, of course, the OIH, which is the Oil Service Index. So all I'm saying is that the irony of the whole thing, except for times like in 2000, in January of 2000, where the Dow made its high, and I think it was the 14th of January, and then the S&P and the semis and the NASDAQ. Well, the NASDAQ and the Qs made the NASDAQ and the S&P made their highs in March. That's one of the few times it's been actually a 3-month divergent. Now there was a 3-month divergent when the Dow finally made its high. So the answer to your question is 1,800 stocks. I respect that, and we'll be watching it real closely, because if next week we do make a high, that's going to be important. Hey, thanks so much for calling, Ben.
Yep,
we'll go into it again next week. Folks, there'll be a break now, and then stay tuned for the Diagnostic Trading Hour. I'll be back tomorrow. Have a wonderful day.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.